Hi, Richard here, and it's really interesting to see how this has panned out. What we've got is a spike high on a daily reversal, a key reversal bar on this resistance, which is one of our three levels of resistance that the market is facing. So the short of it is I expect some short-term downside activity before we find support and know whether or not we're going to continue further north, in which case we'd be looking at this 11,000 mark, and then following that the 11,200 mark. But you need to look back again and remember this August 2009 resistance has been support a number of times, was broken during the flash crash and then became resistance now for the third time. We're also talking about a 61.8 retracement of the April to late June low, which is this round figure here, as well as the 333 Elliott wave pattern, which sits in here. It's quite complex, but effectively they're overlapping three waves. All of these, there's up A, B, C, down A, B, C, and then back up into the extension of what is likely to be the culmination of this 333 pattern. So what's likely to occur? Well, I think there is short opportunities from here. We're looking at trading down to at least a Fibonacci retracement of, in the short term, of 10,488 on the Dow, possibly 10,375. Then we'd look very carefully to see what the upward activity is, and indeed to determine whether this is an impulsive leg down or another corrective leg. So that's the prognosis for the Dow. In the event that there's support here, well, this is going to go further north, and we can effectively project that out and say, well, what's it likely to do? Well, 11,100 would be that first target. Then of course that's that close to the April high at 11,200. Then that would be under threat as well before we went potentially higher towards the end of the year. That's going to take some time to unfold though. So short-term action is likely to be down in either an impulsive manner or in a corrective manner, and then we'd look for a stop and reverse to go long. On the Aussie market, the Australian SPY, we can see that we've had this topping activity here. It hasn't broken above, even though it's trading very close to the 4,700 mark. It hasn't broken through. Our next target, in the event that it does, would be 4,800. But again, this is a corrective move with the three waves A, B, C, and then this X joining the next A, B, C, and then A, B, C, and then a five-wave movement up for the C, which is the nature of the last waves in these patterns. They display five waves up. So that's what we're looking at the moment, and of course that pattern looks different from the one we just saw on the Dow. There's no spike high. The Australian market is certainly looking to go higher given half a chance. So the potential is to be able to say, all right, well, in the event that this breaks down here, this 4,600, this would be a short opportunity at 4,000 to a target of 45.28 and 44.74. And in the event that it breaks higher, and it really hasn't yet, even if we put this line across the top, as I put in my previous update, we were looking for a breakout above 4,700 on the daily. Well, that simply hasn't occurred yet. So it's seeking direction, but certainly down here on the MACD it looks like it's rolled over slightly. This is a chart of the financial sector, and it's worth looking at because it also displays a very correctional triangle, and these have, you can see the three wave patterns there, up for 5 on the last. Well, this could be 3 to 4 and then up to 5 around this E, or it's going to finish tail off exactly at this 45.50 mark and then head lower. But of course that all depends on the indices, but in the event that that occurs, there's some pretty good shorting opportunity there. Materials looks different, even though it is overlapping, hence correctional. All of these, again, these three wave patterns They're really persistent at the moment. Is eking out this correctional pattern. This pattern is correcting this 5 waves down here. That's the impulsive nature, and you can see this third wave in here. That's the longest, and it moves the fastest. And of course, in the middle of these is often what they call the point of recognition. In other words, the market is capitulating, people are recognizing, and they're bailing out. So you get these very impulsive patterns, which is very different from this overlapping correctional activity here. So where's it likely to go? Well, again, it's looking for direction. It's knocking on the door of moving higher above 12,600. 12,944 or 50 would be a target in the event that it does break up further. The Australian dollar, however, gives us a sort of bit of an indication as to what's going on. Again, the relative strength index completely overbought, knocking up against this upper trend line. Often in these patterns, and one can call this an ending diagonal, they will or can throw over the trend line, actually throw over, and then they capitulate down, and they usually end up around about where they started. Whether or not that's the case in this instance, the jury just simply has to be out, because I would say that a retracement opportunity, and there is most definitely a short opportunity in the event that this is confirmed, this spike high is confirmed, and we get some down, key reversal down activity day, then we'd be looking to 93.20, and indeed 92.12 would be the interim target, or possibly as low as a 61.8% at 91.10. So it has been an incredibly straight shot north. It's hit our target absolutely smack on. There it is, 96.43. In fact, I'm not sure whether that went above it. I suspect it didn't, and we can have a quick look to determine that by having a look at the cursor window. And if I hold it over, the high was 96.47. So that's only a few pips out from what we forecast, which was actually, the measurement was taken off this one up and down for 2 here to give us the start of this bottom trend line here. So the Australian dollar has hit its initial target, certainly can go higher. There's the mid 2008 high at 98.49. I would suggest that if we get support in any of the major indices, then the prognosis for Australia's commodities, the quarry that we are, would push that further north to at least hit, if not push through. And if it does push through, whereas in the past I've always been a disbeliever of the parity, if it breaks through that, then we would be on for one with the US, one would imagine. The gold chart is displaying some reversal activity. Certainly a key reversal here has occurred. We're completely overbought. The market has moved up just in an amazing straight line, and that rarely happens. You have to go back a long way until October 2009 to see that sort of activity before. You can see this spike low here. This was a savage, from memory, around about a $60 reversal before it absolutely sucked back up and made the new high. So I don't know whether that'll happen this time, but you can imagine that there's a lot of nervous fingers on the trigger, given that they're well in profit, and the target of 1,300, that big round Fibonacci $1,300, has been reached. And even as we've spoken, you can see a little bit of downward movement in gold. That's the last chart on that, and for more activity you can go to the marketforecaster.com.au and see both the indices sectors and gold stocks in more detail.